to Yellow Tunnel. My name is La Carpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable where we talk about current market conditions, go over any questions you might have about your Yellow Tunnel subscription, and what are the opportunities in the market. For those of you who are new, welcome. I see a lot of new names. Perfect, Helmut, thank you. Alex, now you can hear me. Perfect, thank you. So welcome. I see a lot of new names. So a lot of returning subscribers. Thank you very much. I enjoy when a lot of people join, and especially when market pulls back, uncertainty. So definitely see an uptick in attendance. So I appreciate that. For those of you who are new, my background is in technology. So I have master's degree. I got master's degree a long time ago in computer science. Actually specializing in artificial intelligence, 25 years ago. So that's my passion. Worked for several startups here in Chicago in fintech space, broker dealer, hedge funds. A couple companies went public. Since they went public, I decided, well, I'm going to manage my own money. So I've been doing that for close to 20 years, probably more, close to 25 years. Mentoring and teaching subscribers how to trade stock and options. Keith from Options Hotline joined us. Conducting live trading room. We have a paid service. We have coaching, one-on-one coaching program. And Keith brings a lot of background in options market maker. He was a ex-market maker. He worked in a hedge fund. So he has a lot of trading experience. So between two of us, we have probably closer to 40 years of trading experience managing and also building technology and artificial intelligence, new signals using the latest advances. You can see on our website, we have now chatbot, right? The same idea. It learns on customer service, on phone calls, support tickets, and gives answers. Very similar idea of how we've been doing for the past, 15 years of Tradesman and Yellow Tunnel, of building the models and learning on stock movements, right? And close the prices and earnings to come up with a signal. So that's what we bring to the table. For those of you who are new, disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit this link on your screen, optionscreening.com, so you can understand the risk and suitability associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Right, before we jump into trading psychology, Yellow Tunnel, one of the ideas was that psychology is very important. Not only it's important to predict where the stock market is going, what are the key support and resistance levels, but also to be self-aware and how do you know, how well do you know yourself? How well do you know how you will react when the trade goes against you, right? And that's a learning process. It's a journey of kind of discovery. That's why I like trading. It gives you that opportunity. That's, the basis behind the Yellow Tunnel. But, most people don't care about trading psychology, so which is, I think, is not good. So we'll jump into the more interesting topics of current market conditions. So as you can see, stock forecast toolbox for spiders. We predicted 620 to be support, 630 overhead resistance. This data is updated. Real time. Again, portfolio, we're having difficulties because the portfolio is synchronized with the orders and positions are synchronized with our broker dealer, but they're having technical issues for the past few days. So you can't see the orders and positions. Keep an eye on email and SMS messages. I do send out email and SMS message with trade alerts, so please keep an eye on that. But these predictions do work. So looking at the spiders, 620 to be support, 630 to be overhead resistance. Somebody said about AI analysis. That should work. Let's see. Forgot to check that. Maybe not. That does not work. Okay, we'll check that. But for spiders, model did wrong and basically showing the 620 to be support, 630 overhead resistance. We have an update in longer term trends. Basically says we could get to 655 level, right? But 622, 630, we're already overbought for 10-day prediction. Let's see potentially reaching actually 600 level, right? 600 level on SPY. So that would be the predictions based on the model. So 10 days, potentially you could reach 600. Next few months, 630. I mean, best case scenario, 650 in the next few months based on the current pullback. So let's look at Bitcoin. Bitcoin is basically retesting the breakout back in May when we made new all-time high, and actually today made new lows, lower than Friday. So Bitcoin is weak. One place I use for proxy for risk taking. 10-year yield so far, we made new lows again. In 10-year yield, 2-year yield, we made new lows. Well, no, we didn't make new lows. We rebounded, but kind of still a weak rebound. VIX pulled back significantly from 22. We had a 17 print, so nice rebound in VIX. Pretty good rebound in QQQ. We closed the gap in QQQ. We closed gap in spiders. We closed gap in SMH, actually higher. And now the question is, well, what's next, right? I've been looking at the SPX. And if you look at the SPX position, right, let's look at SPX. If you followed my live trading room or broadcast from last Tuesday, I think last Tuesday we were talking about 6,300 is your main support, right? 6,400 is overhead resistance. If we break 6,400, we're going to 6,500. We had unemployment data, which was a little bit worse than expected. We have a little bit worse than expected tariffs, right? The 30% tariffs on Canada. On India, there's a higher tariffs, and Brazil, higher tariffs. So it's kind of a mixed bag. And on Friday, after the tariff news and unemployment data, market pulled back and retested 6,200 level, right? So 6,200 level is your important support, right? I would say this is support number one. Currently, we're trading right at the 6,300, right? So call wall, you can see the highest position of calls, puts, and the highest position of calls, right, where people holding their puts and call position, right at 6,300. For now, it's acting as a magnet, right? We were, as low as 6,200. We bounced back, right? We bounced to, I think, 6,350, and we bounced back, right? So for the next, until the next expiration, which is still, 2.5 weeks away, this is acting as a magnet, right? So support number one, 6,100, that's Friday's low. If we break through that, like Bitcoin, if we break through it and continue to go lower, I mean, you have some support at 6,100, 6,500, much bigger is 6,000. Right, that's the highest positioning right now is at 6,000. So somewhere between 6,000 to 615 would be the next level I would watch, right? If we are, stay below 6,200, at least for a couple of days. But until then, 62 is your support. 6,300 is where we are right now. And then your resistance is 6,350, and then all-time high is 6,400. If you look at the, let's look at now expiration. So let's talk about, we have August expiration, right, in 2 weeks, August 15, and then we have September expiration, which I think actually has more positioning. A lot of people are anticipating, that the pullback probably will accelerate in September. And you can, and unusual, right? Usually the front months has higher gamma overall, but now the higher gamma is in September. Nothing huge, 44 billion in April, May, when we had the, Liberation Day, first phase of Liberation Day, we're at 100 billion, $120 billion. But nonetheless, $46 billion of position in September, and then another $40 billion position in August, right? So these contracts do provide support and resistance levels. And we can see, if you look at the one standard deviation, there are different scenarios, right? Different scenarios can happen. One is, we retest this level and we hold, right? So one scenario number one, we're going lower, right? We break through the 6,000 and we're continue to trade lower. Scenario number two, we're trading somewhere between 6,100 and maybe all-time high, maybe marginally higher, 650, right? That's scenario number two. And scenario number three, we're going higher, if we sign an agreement with Canada, if we sign an agreement with India, right, with China, well, then we could, and earnings were decent, right? Earnings is behind us for the most part. All the major S&P 500 companies announced earnings. We still have earnings from Disney and AMD, but I don't think that those news will move will have a material impact on the market. So I think tariffs, right? Anything positive on tariff side, and we could revisit 65, 65.50, make new all-time highs. Scenario two, we're just trading in a range, right? Somewhere between 6,000 and 6,400, 6,450, right? And then scenario number three, if we have initial claims worse than expected on Thursday, if the inflation data next Tuesday, Thursday ticks up, market is vulnerable. You can see volatility picked up on Friday. So we're approaching September, August. You could have, by September, right? We're analyzing, August, September expiration. By end of September, we could be below 6,000. So how many of you say scenario number one? We're going below 6,000, right? Recession, probability of recession is increasing. Fed is behind the ball on lowering interest rates. We're imposing large tariffs on India and Canada and and Brazil, a lot more than 15%. And then we're trading one. Trading two, we're kind of 15% tariffs across the board. We'll reach an agreement with Brazil and Canada, and we're just trading sideways. And scenario number three, we signed an agreement with Canada, Brazil, and India, 15% tariff across the board, and earnings are strong. Unemployment, this is just a one data point, not a big deal, and we're going to three. All right, Alex, Carol, Chuck, Helmut, Lalit, Linwal, Maurice, Tim. All right, we have a lot of people today. One, we're going to 6,000, 6,000 and below. All right, Alex, thank you. Carol, two, 6,000 holds. Alex, do you think 6,000 holds or we break below 6,000? Lalit, Linval, Tim, Alex, Carol, Chuck. All right, so 50-50. I like it. 50-50, I'll take 50-50. I'm going to go with two. I think we could have one. So I agree with Alex. We could break 6,000, right? So for now, I think, trading is distribution of possible outcomes. We do have a pretty large support at 6,000, but, one bad print on inflation data, one bad print on unemployment, right? If unemployment actually ticks up significantly, right, then we could have one. But for now, I think, one standard deviation, that one sigma move, basically tells me we're range bound. And I think the more risk right now to the downside. If last week I was more bullish on the market, buy into the, pullback. Right now, you probably want to, maybe consider sell into, definitely raise cash into the strength, right? Every time we get to 6,300, every time we get to 6,400, I think this is an opportunity to raise some cash, all right? So whatever your cash level was last week, before Friday, if it was 30% cash, 40% cash, I propose it should be higher. If you did not have any cash, everything was invested into long stocks, this is a rare opportunity to raise cash, and you might not get this opportunity for the next couple of months, right? So I would propose to raise cash. And you can see I closed most of my position. I have right now one long position, one short position, right? So I'm market neutral. I have JP Morgan. If market continues to rally, I have QQQ put spread. If the market pulls back, maybe add, we talked about, Caterpillar, GE, some of the industrials are still in strong uptrend. But for every long position, I would have a short position, or at least consider some hedging. So that's my view on the market. Any questions? So how do we help? Again, we have different services right now. The information is a little stale from the last week. So if you did sign up, you would get an email, an SMS message. But we have weekly power trader where we give you signals for, this was from last week, signals, for the stocks that are in uptrend, right? Like Microsoft, JP Morgan, General Electric, all of the strong signals, SO. You have dynamic power trader. These are the actual positions that I'm managing, right? I closed these Delta Airline and NVIDIA last week, but this is something that I might potentially get into it again. Earnings power trader, keep an eye on SMS and email. This week, you might not see the orders in position because it's not synchronized with broker deal, but you'll get an email and SMS message. I'm thinking about adding position in AMD today, so I'll do the AMD trade. And then we have finally Profit Accelerator. Profit Accelerator, where I only trade stocks. So any questions? So keep an eye on the email and SMS message. We'll send it with the up-to-date information. And always look at the recording. Recording has all the latest information, right? Live trading room recording. Even if you're not in live trading room, you can see the live trading room from this morning. You should be able to see all of my positions, all of my trades. Everything is up to date. And if you couldn't participate live, just please watch the recording, especially for the next couple of days until we fix our synchronization with orders and positions. Try out our chat, right? This is kind of my new pride and joy. I spend a lot of time to make sure that somebody can answer your questions 24/7. We still have a live, you can schedule a consultation with the live product manager, Keith. He can, or alone. You can enter a ticket, to get live, but try this out. You can ask any questions, how much money should I invest? How many positions should I have? What's the difference between stock and options? What services can I trade, using options? So any questions, try it out about yellow tunnel. If you'd ask about what's the best signal or what the best stock to trade, it's not going to answer it, right? But it's supposed to answer any questions about yellow tunnel that you can have. So try it out. It's a pretty exciting time we're living in terms of technology, and they're definitely going to change the world and corporations going forward. So that's exciting. SPX, we talked about SPX. So what else? Where else are opportunities? I still think it's a momentum stock picking market, and I would concentrate on stocks that have momentum. Like today was Caterpillar, right? Caterpillar, you can see still strong uptrend despite the pullback on Friday after the earnings, almost made new all-time highs. So that would be a stock probably would buy into pullbacks. I would maybe not chase the market at these points, but every time you have these 1.5% pullback, I think Caterpillar is a good entry point. Banks did pull back. JP Morgan actually reversed most of the gains today. But as long as it's above 50-day moving average and then February breakout level, I think these are viable opportunities. If we breach 50-day moving average and it pulls back, then I think long-term trend is kind of reversed and broken, right? But as long as we're staying above 50-day moving average, I think this trend is still intact. So some of the banks, some of the Meta, some of the Magnificent Seven, whether it's NVIDIA is still in strong uptrend, Meta is in strong uptrend, Microsoft is in strong uptrend. And you have to be selective because if you look at the percentage of stocks above 20-day moving average, significant drop, right? From July highs, we were at 80–90%, and now we dropped to 20%, right? So only 20% of the stocks are above their 20-day moving average. So you can see that market participation definitely has changed. People are nervous of recession, right? The 10-year yield had a pretty sharp drop. 2-year yield had a pretty sharp drop. We broke through the July low. We're retesting, May low, and then potentially Liberation Day low. So I would keep an eye on yield. I think corporate bonds are a lot more important than the equity markets. I mean, you have individual stories like Pelletier, where it's breaking out, continues to go higher. Okay, fine. I mean, these are good stock. Wayfair had a strong earnings. They're breaking out. eBay had a strong earnings. They're breaking out. So you do have stocks that are in strong momentum and uptrend, and that's where I would invest on pullbacks. but that number is continued to decrease. That number continues to decrease. And August, from seasonality point of view, I mean, it's fine, but you know, it's probably neutral returns, maybe slightly bullish. But September, October, in the past few years, have been negative returns. So you have to be careful and not chase the market at these levels. And again, my best proxy for risk taking is Bitcoin, right? And Bitcoin is retesting Friday's low, right? If the 50-day moving average doesn't hold, right, that 110,000, then I think there's more room to the downside. For now, SPX is still holding on to 6,300. So that's the win for the bulls. And then copper, right? Tariff news, right? Copper inputs versus copper outputs. Everybody thought they're going to tax the actual copper, physical material, at 50%. And then on Friday, Trump said, or Thursday, Trump said, no, 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 it's only going to be the materials that are produced. And you have these historical moves, right? I think copper, biggest sell-off in the past, I think 40 or 50 years, right? So you have, you know, stocks that are, or asset classes, or that are within this tariff, you know, they do get affected, right? And you can see it, you know, in Mexico stock prices, and Brazil, and Canadian, Indian stocks. They're under a lot of pressure. Crude oil also pretty weak, so something to keep an eye on. What else? Any other questions? All right, Alex, Carol, Chuck, Helmut, Kevin. Kevin is back. Lalit, Linval, Morris, Tim. Any other questions? So for now, I think the theme should be market neutral. I would be market neutral. I would, right now I have a QQQ put spread. If you're not comfortable trading options, I know a lot of people are not trading options. We have SH position in paid in Profit Accelerator, put on a paid SH position, which I also think can continue going higher, right? Or PSQ, inverse ETFs. You can buy inverse ETFs. Some people like leverage ETFs. I don't. If in case instead of buying ultra pro short QQQ, I would buy something options or just regular inverse ETF. But I think out of the 4 positions that we're proposing, at least one of them you want to have bearish, right? Or trade spreads, right? Trade spreads. So the idea is to have 4 active positions, not to risk more than 2.5% account value. At this point, I would say 2 long, 2 short positions. Right? Or you can find like things that are breaking out and inversely correlated, like gold miners are breaking out. All right, silver is on strong uptrend. So you can find some of these stocks that are kind of in a strong uptrend and participate. Any other questions? All right, 1227. Let's see what else. So we talked about services, right? Different services. So again, earnings power trader, you'll get email and SMS on earnings trades. These are using options. Profit accelerator stocks, dynamic power trader, combination stock and options. And aggressive power trader and weekly power trader, you get our commentary with output of the signals, right? Short term, aggressive power trader every day, weekly power trader every week. Any questions? So let's sum up the week and see what we see any new signals. Some of the retail stocks, right, specialty retail like Wayfair, they're in uptrend. So XRT, they recovered half of the losses from last week. Oil is weak. Metals and miners recovered more than half of losses from last week. So metals and miners are still in strong uptrend. Consumer discretionary recovered maybe half. Healthcare is still one of the weakest sectors. Utility is one of the strongest, right? New all-time highs. I think having at least some exposure to utilities that benefit from AI, you get dividend, right? They pay you dividend, and they're in strong uptrend. So that makes sense. Consumer staples kind of sideways. XLK, QQQ recovered half of the losses from yesterday. Industrials are getting weaker, right? General Electric today pulled back. Caterpillar is kind of trading sideways. So for now, it looks like it's building at the top on industrials. Banks similar, pretty weak rebound in banks and industrials. For now, materials, pretty weak rebound. Home builders actually making new highs, right? So that's a good sign. But relatively, right, in the higher than the last week. It looks like people are trying to snatch some of the beat up stocks. REITs are weak. VIX is at 17 premium, pull back. QQQ recovered half of the last week losses. Spiders recovered half of the last week losses. Semiconductors probably half. Airlines still weak, so airlines are still pretty weak. Transportation still weak, less than half that has been recovered. Small caps are actually doing pretty better than I expected, right? I was concerned about 215 level. We broke through it briefly, but now kind of recovered. So maybe half of the losses are recovered. India continues to be weak with the tariffs. Japan actually doing better, right? Is reaching an agreement, so Japan is doing better. Germany recovered half of last week losses on the tariffs agreement, and gold miners, strong performance. Emerging market recovered half of the losses. That's about it. All right, any questions? All right, there are no other questions. I mean, that's all I have for today. Again, I think now you want to be more defensive, right? Whatever your opinion was last week, you wanted to be more conservative than in the last couple of weeks. So that means to me, this is an opportunity to raise cash, hedge some of your long positions. I mean, the long-term uptrend is still intact, right? But you can tell that, depending on macroeconomic news and tariffs, the market volatility will pick up, right, as we get into September and October. All right, that's all I have for today. Thank you very much. Thank you for new people to join: Alex, Carol, Chuck, Helmut, Kevin, Lalit, Linval, Morris, Tim. I know a lot of you are new, so appreciate you guys joining. Thank you. And same time next week. We'll have CPI. Keep an eye on this week. I would keep an eye on Thursday on initial claims, right? If all of a sudden initial claims drop, or so rise, sorry, no. If initial claims get to 250, 260,000 because of all these revisions, then that could be an issue, right? So I would keep an eye on that. And then obviously CPI data, right? Dual mandate. Will Fed lower interest rates? Will they do another 50 basis drop cuts, right? That's, I mean, nobody knows, right? But CPI and PPI data is going to be important. So that's Tuesday. CPI data is on Tuesday. So those are the next two data points outside of the new announcements on tariffs that could create market volatility. All right, thank you very much and have a great day.